Going to be a theme tune, and then we'll be going. It's 6 o'clock in London, it's 1 p.m. in New York, it's 1 a.m. in Hong Kong, 3 a.m. in Sydney, 10 a.m. in San Francisco, and 10:30 at night in Mumbai. Greetings, good morning, good afternoon, and good evening, depending on where you are in the world. My name is Patrick L. Young. The IPO-VID livestream is back for the new year. Welcome to 2020, everybody. This is Series 9, Episode 02, or actually, we could give it its shorthand, Episode 50, a half century, something which no England cricketer has scored in recent times, according to the latest Ashes tour. So we have got, ladies and gentlemen, a cornucopia of news that's been happening in the world of exchanges. I'm going to pick one story for you that came out today, a record volume of environmental contracts traded on the Intercontinental Exchange in 2021, equivalent to an estimated $1 trillion, maybe I should go $1 trillion in notional value. That was 18 billion tons of carbon allowances. You'd certainly notice that if it fell on your foot, equivalent to an estimated 1 trillion in notional value and equal to over half the world's estimated total annual energy-related emissions footprint. All this and more has already been covered in greater detail in Exchange Invest Daily, the unique newsletter of the Bourse business. Send us an email or hit me up on social media, wherever you're watching this, Facebook, LinkedIn, or YouTube, Patrick L. Young, and ask if we can get you signed up for a free trial to understand better the business of bourses. We have a special show for you today. I have a co-host in the shape of Steve Zwick. You may remember him from several shows ago where we were discussing the wonders and incredible nature of the carbon markets. I've invited him back. We're going to have a mini series over the course of the first quarter where we're going to be talking to a number of major players in those carbon markets. And our first player, our first guest of the year, is William Pazos. He is the co-founder and managing director of AirCarbon. AirCarbon is a frictionless carbon exchange offering the lowest fees in the industry, helping the world meet net zero. William is a native speaker of Spanish, Portuguese, and English. He's a senior climate finance and renewable energy expert with a proven track record developing, financing, and managing projects in Asia, Latin America, and Africa. Without further ado, ladies and gentlemen, if you've got a question, hit us up. Facebook, LinkedIn, or YouTube, ask something down the side of the questions, send us a comment, send us a little bit of maybe, love. We would really, really be delighted to see you if you can possibly manage to do that for us. William, hi, good evening. Where in the world are you today?
Well, first of all, Patrick, thank you so much for having me tonight. I'm in good old London. Nice and dreary day today, but this brisk weather is good for all of us. Thank you for having me.
It's a delight to see you today all together, William. I mean, it's great to have you here, have you on the show. I'm sorry to hear London is so dreary. Presumably the Prime Minister isn't running one of his parties this evening because there isn't enough lockdown going on to make it thoroughly illegal in a speakeasy fashion. So tell me a little bit about yourself. How did you come to the idea of AirCarbon Exchange?
Well, I guess by way of background, I actually got into the climate business about 20 years ago. I founded a company, co-founded a company called IPO-VID, which ended up becoming one of the largest carbon aggregators during the first Kyoto phase. We sold that company to Bunge back in 2007, right before the global financial crisis, which was actually more luck than design. But anyway, I left the carbon markets in 2012 and promised myself never to go back. One of the problems with the carbon markets is that scarcity is a function of political will, and political will was waning after the global financial crisis. But sort of fast forward to to about 3 years ago, we were approached by Enterprise Singapore, which is a part of the Singapore government, with this idea of creating a digital carbon exchange in Singapore. And we sort of centered on the idea of bringing traditional markets architecture, commodities market architecture to the carbon markets. And that's what we've done.
So that's a fascinating concept. Traditional commodities architecture to the carbon markets. How do you apply something that involves physical commodities into what is essentially hot air?
Well,
yeah, well, that's actually a good way of putting it. But if you sort of dumb it down a little bit, if you look at traditional commodities, what actually happens is that commodity will sit in the warehouse, and what trades on the exchange are digital receipts that point to the commodity that's in the warehouse. So we brought that same construct to the carbon market. So instead of having a physical warehouse, we have a trust. And within that trust, we hold carbon credits. And for every carbon credit that's in that trust, we generate a digital receipt on the exchange. It becomes a tradable instrument. So on AirCarbon, you can trade, a ton of carbon several times in a minute. Whereas if you use traditional trading architecture, you're lucky if you're able to get one trade off in a day.
That's fascinating. Okay, I really get that. That's very interesting. Good evening, Peter Secon. It's great to see you this evening. Hello also, I do believe, to Simon Huckle. It's great to see you as well. Thank you, viewers. If you've got a question, let us know. So this is really, really interesting. Okay, I understand what you mean by your carbon market replicating a commodities architecture. You've got this trust structure. So therefore, the carbon sits in a trust. Now, maybe I can bring in Steve here to advance the discussion. Steve Zwick, the presenter of the Bionic Planet podcast.
Hello. Can you guys hear me okay?
Perfect.
Yeah, hi, Steve.
Okay, great. Yeah. Thanks for bringing it. It's to me, what's really interesting about this, coming is that you're bringing some kind of standardization and structure to the voluntary carbon markets, which, I mean, I can see why it's fairly easy to do that in the compliance markets, because we have, you have a compliance-driven price and the scarcity that you mentioned at the start. But in the voluntary markets, I mean, prices are all over the place. Every individual project has its own price. Most deals have historically been negotiated bilaterally, and you've created you've created an exchange-traded product that I initially thought was kind of a token. I thought you were creating a token out of a basket, but it looks like what you've done is essentially you've created a basket of, say, CORSIA compliant offsets or nature-based offsets, and then people can come in and they essentially buy up any offsets that are in that category, and that creates your reference price. And I'm wondering if I've got that correct, and how you came about this, how you arrived at this solution to the problem of trying to create a reference price for voluntary carbon, which is so difficult to do.
Yeah, well, you almost got the construct correct, in the sense that we don't have a basket. Right. So if you are a seller of carbon credits and you bring your carbon onto our platform, we do create a digital receipt in the form of a token that sits on our exchange. But that token, all of the metadata of that token is attached to the carbon credit, the specific carbon credit that sits in the trust. So if at any point in time you decide that you want to, just like in regular commodities, that you want to take back the carbon credit, take physical delivery of the underlying, you can request physical delivery onto the exchange, and we will freeze the token and send an instruction to send the carbon credit back to your account. So every token or every digital receipt on the exchange is backed by a carbon credit that fits the specification. So the first basket that we created, ICAO did all the heavy lifting, right? So they came up with the CORSIA standard. And so we basically replicated that CORSIA standard and created the CET, CORSIA eligible token. So today, if you want to go long that asset class, all you need to do is come onto the platform and buy a CET. and you're long that asset class. And not only that, you have a price, a bid and an offer, and a discoverable price on the exchange. The other way of doing it is, as you say, on an OTC basis, you go and you buy a project that's eligible under CORSIA, and unfortunately, in that sense, you don't have a discoverable price on an exchange. It's almost like buying a painting. And that construct actually boxes out a lot of investment dollars, right? There's literally trillions of dollars in the hedge fund industry that would like to invest in the carbon markets. They know that we're moving into a carbon constrained world, but when they look into it, they are faced with a market that has to trade on a project by project basis. And that's completely not scalable, right? So we're providing a way of the market scaling and unlocking all of that financial funds that are sitting out there.
Okay. Yeah,
really interesting. So just 1 second, Steve. I want to jump in with a couple of things. First of all, let me say hi, Tom O'Brien. Great to see you this evening. Happy New Year to you. Delighted that you're listening to this interesting discussion. I thoroughly agree. Couple of things, gentlemen. I'm going to ask you for a couple of definitions, respectively, in a second, for idiots like me who don't understand these carbon markets, and perhaps some of our viewers may be as ignorant as I am as well. One thing, though, you mentioned about this whole idea of you have a specific receipt in the warehouse, which is wonderful. So therefore, you can pick that carbon receipt out. But Bill, let me understand. I mean, gold obviously is an element, so that's wonderful. You've got 4 nines gold, it's all basically exactly the same. Carbon is very different, is it not, in terms of what's going on? And then second of all, I'd love you to try and explain, maybe you can start with that, this concept of voluntary carbon markets. I think a lot of people are slightly confused by just how voluntary they are. I mean, are they voluntary like people decide to join, or are they voluntary like I want to volunteer at school to play rugby?
I'm probably going to enlist Steve's help on the definition of the voluntary markets, because what I feel is that the voluntary moniker in these markets is actually over time going to drop, and the line between voluntary and compliance is going to blur as we move further and further into a carbon constrained world. So for example, in Singapore, Colombia, South Africa, these are all carbon tax regimes that are either accepting or will be accepting carbon credits from the voluntary space in payment for your carbon tax. So the idea that this is a voluntary carbon credit sort of goes out the window when you can start using it to pay your taxes, right? So it is voluntary, and the reason we use the term voluntary is that until very recently, it was being used by companies to offset emissions that they could not reduce internally. And they were doing this on a voluntary basis. But as we move forward, we're seeing that, for example, companies that are listed on stock exchanges that make announcements that they're going to be net zero have actually boxed themselves into the carbon markets because they are being, as a regulated company on a listed on a regulated exchange, they need to then comply with these announcements. And the only way for them to comply with those announcements is through the voluntary carbon market. So every time you hear a company that's publicly traded announce that they're going carbon neutral, net zero, or any of those other monikers, really what they're saying is they're going to buy carbon credits.
Interesting. And hello, Craig Richardson. Thank you very much for joining us this evening. Feel free to ask us a question, ladies and gentlemen, on Facebook, LinkedIn, or YouTube, wherever you're watching this show live. We'll be delighted to take them. We are in the studio this evening. I was about to say I'm in the studio this evening, but I'm with Steve Zwick, my co-presenter for this evening. And we've got a fabulous guest, Bill Pazos, talking about AirCarbon's net zero mission. So on that net zero mission, guys, perhaps Steve, you can jump in and help me here a bit with CORSIA, and then we can get back to the question about taking those carbon credits out of the trust. Yeah.
CORSIA is civil aviation I forget what it stands for.
Carbon
But it's
Offset Reduction Scheme for International Aviation.
That's it. Thanks. Okay.
10 out of
And
10.
it's what's that?
10 out
And
of 10.
yeah, but it came about because the Global Civil Aviation Authority under the United Nations, they reached an agreement a few years back that airlines will have to freeze their increase in emissions at a certain point. It's going into the future, and they can use offsets to keep themselves into compliance with that. So it's kind of a hybrid um, compliance, voluntary market. I mean, countries voluntarily step in, but if you're an airline within that, you've got to meet these requirements. So you have to purchase offsets that are CORSIA compliant. And there were a few years of negotiations where there was a lot of back and forth, and they were looking at all the different voluntary offsets that were available out there. And they finally settled on a basket of offsets that includes various different categories and restrictions and limitations within some categories. For example, within RED Plus, which is the forestry sector, those are offsets generated through reducing emissions from deforestation. They only allow offsets to come from jurisdictional programs, which are a little bit more complicated than project-based programs. So it's a category that the aviation industry and the aviation sector agreed after a lot of intense negotiation that they were only going to recognize certain offsets that met this compliance criteria. So when he talks about CORSIA compliant basket, those are offsets that were generated under the voluntary carbon market, but they're now being recognized in this kind of semi-regulatory regime. But you could still buy them. I mean, I think the thing I just briefly pick up on something that Bill had said that I think is kind of important to talk about is there's an evolutionary history on the market. So, if you go back to the days of the Kyoto Protocol, you had the CDM and you had compliance markets where you had a legal mandate, and they were all created in one specific way. Voluntary markets were created in a whole separate vein, and they were created from standards that kind of emerged outside the UN process and outside the government process. And gradually, in some ways, a lot of the practices that were arrived at through experimentation in the voluntary market came to be recognized in compliance markets. And now we are at this state where, as Bill mentioned, you have countries like Colombia, which has a carbon tax, but it says if you want to, instead of paying your tax, you can buy a Colombia-based voluntary carbon offset that's recognized under the verified carbon standard, meets certain criteria. So they are merging, and eventually, they will eventually, the general feeling is that they will eventually converge, and we just don't know how. But for now, what's happening in voluntary markets are anything that is above and beyond what a company is mandated to do by law. So it's more, the category of voluntary versus compliance now is more about what the intent of the buyer is than about where the actual offsets originated. And Bill, correct me if I oversimplified.
I think that's good. I think that's going to be enough for this evening. Otherwise, we'll all be like the fat kid in South Park and
let Bill check me on that.
Trying to skip schoolroom because it's our brains are full. Did he do well, Bill?
Yeah. I mean, CORSIA is the airlines agreed to cap their emissions to 2020 levels by 2050, even though they're going to double in size. So, the issue with the types of credits that are accepted under CORSIA is that it's too broad of a basket, right? So it includes renewable energy projects from the first CDM phase that currently trade at $8, but at the beginning of last year were trading at 85 cents. And it also includes carbon credits that are forestry based that are trading at $15 a ton. So clearly, when you look at the CET and our CORSIA contract, it will sort of the first credits that are going to be tendered within the CORSIA market are going to be these sort of low end, if you will, lower priced assets, and the forestry projects are not actually going to be tendered by the airlines.
That's quite fascinating. So let's go back to this issue, because you talked about this. I mean, you can withdraw your specific carbon credit at any point in time, but therefore there are obviously differences. I'm not saying necessarily better quality, lower quality, but I mean, all carbon credits are not exactly equal, right?
That's correct, but they're also not all completely different, right? So you can, so for example, there is a market reality that probably stems from the cutoff date that was adopted by ICAO under CORSIA, which is 2016. So if you look at a REDD+ or a forestry, a nature-based project, prior to 2016, it's priced at, let's call it about $10 a ton. Post 2016, it's trading at close to $15 a ton. So there's this disconnect in the market, this feeling in the market that 2016 onwards is there's a consensus that it has a greater value than something from December of 2015. There's no rhyme or reason to it, but what we do is we sort of keep our finger on the pulse of the market, and whenever we see a sort of the market coalesce around a certain type of demand, and there is sufficient supply, then we create a contract and we test the market out to see if they actually want to trade it. So, for example, there's huge demand for removal credits, right? This idea that avoiding carbon is not enough. We need to start removing the carbon that's in the atmosphere. So projects that are removing carbon from the atmosphere are selling at a huge premium. So, and there is a lot of demand. So technically we should create a removals contract. The problem is the universe of removals credits are so small that yes, we have the whole specification on the shelf, but we won't launch it until there's enough demand for us to be able to make it into a tradable instrument. So that's sort of how the contracts are created.
I'm kind of wondering how this because one thing that we talk about a lot is this need for core carbon principles, and then also a core carbon price, a core carbon reference price, and that kind of, there's I always thought it would be some kind of a weighted index. I guess my former colleagues at Ecosystem Marketplace are trying to create a weighted index that will then, that they say will provide a carbon price that is not, it's not the lowest. It's kind of the consensus price of what represents an emission reduction, and then other offsets could trade at a discount to that, and some could go at a premium. And I'm just wondering if you had any thoughts on how theoretically or how philosophically that idea works, and also if it's realistic to even have something like that, and what value it would have. I think that's because that's this thing that came up over and over in the task force discussion.
Yeah. Well, I think the problem with the task force trying to come up with a core carbon, that was actually when the task force came out. I was, like you, I was part of it. Super excited that they would come up with a core carbon contract, because they would be doing a lot of my work, right? And so if they came up with a core carbon contract that the market could rally around, that would make my life a lot easier, just like CORSIA did, ICAO did with CORSIA. But unfortunately, they've they're looking to legislate quality from the top down. And the markets typically don't need that. They don't need you don't need to legislate quality when you have price, right? So if you have a very low price signal, you can rest assured that the stuff is garbage. So I don't need a task force that spends $7 million to populate itself to tell me it's bad. So, but your point of a contract that mirrors the market is actually very is actually very opportune. We just launched today in a joint announcement with a company called Net Zero that's part of Redshaw Advisors, as well as EEX, which is the European Energy Exchange, part of Deutsche Börse. And we've announced that we will be creating a global emission reduction, a GER, which will address a lot of the things that you have just mentioned, Steve. I can't get into a lot of detail, but you know, stay posted.
Fascinating altogether. Now, let me just ask you something. We had a little bit of jargon there, and we've got a great question from Peter Secon coming up in just a moment. But I think Peter and I would probably be in agreement. We heard this phrase GNT plus, and we presumed that was a double gin and tonic. What was that actually happened around 2016 that changed the nature of the carbon credits?
Yeah, I always say that. I mean, we named our global nature token GNT. And we launched the GNT initially thinking that people would want to gain exposure to nature-based carbon credits. But what ended up happening is that the market really sees a difference between forestry projects pre-2016 and post-2016. It's a significant haircut or premium, if you will, if you look at the GNT plus. So we had to create a second contract, which is the GNT plus, and we have the GNT, which is the earlier years. But both of them are valuable and very rigorous carbon credits. It's just that the market has placed a premium on one over another.
Okay, that's understandable. It's one of those things. And it was good to hear a mention earlier on of the Kyoto Protocol, because when it comes to my COPs, I definitely prefer the early stuff. What we see here is two great questions from Peter Secon. Thank you very much, Peter, this evening. I'm going to ask both of them together. So, how have changes, if any, recently from the cap and trading scheme helped support progression in this field? Second question, and how have European environmental plans supported growth?
Well, I think the cap and trade is by definition something that brings efficiencies into the market. It allows the market to find the absolute most efficient way of reducing a ton of carbon, right? And so the changes have come in a couple of areas. The changes have come in technology. So technology has made it, the quantification of carbon in forestry projects more robust, the monitoring more efficient. The fact that more and more companies are turning towards carbon credits to reduce their carbon footprints has sort of put the wind in the sails of cap and trade schemes. Interestingly, with regards to Europe itself and the voluntary carbon markets, it's sort of a mixed bag. And the reason I sort of smile a little bit is that the Europeans were the real force behind the first Kyoto phase and CDM by allowing CERs into the European emission trading scheme. They single-handedly created a price signal and really pushed a ton of development into climate mitigating activities worldwide. And after the sort of collapse, after the 2012 or so, now we're having a resurgence of the voluntary carbon markets, of cap and trade. We see the Glasgow Pact, the Paris Accords, etc. But the Europeans are sitting on their hands and saying, look, we've paid the bill once, we're not paying the bill twice. And so in terms of the Europeans, they've taken a much more insular approach to the climate fight. Very important one, but I don't think they're looking to finance the world as they did the first time around.
Interesting. Yeah, I've got a question too, kind of going back, because I didn't realize that you came from AirCarbon's, and were you guys active in the red space, or were you guys more active in the renewable energy space? I'm trying to remember. I remember when you guys were around, and because I thought you were more on the nature-based side, which is why Bunge.
No, it's the opposite actually. So if you look at we did this calculation back in 2007. 20% of all the carbon credits that were issued by the UN in 2007, if you exclude HFC projects, were done by AirCarbon's. And the reason for that is that we were very, very early, and we did almost exclusively renewable energy projects throughout all of Latin America. So basically, beginning with Guatemala and Honduras all the way down to Brazil. There was a huge move to increase efficiency of power projects in sugar mills, wind power projects. There was basically the markets were deregulating, and so IPPs became independent power producers became legal, if you will, in these countries, and so we drove a lot of investment through carbon credits into those sectors. I was always very, very skeptical of nature-based solutions. Permanence is something that I still believe is a problem that needs to be dealt with. And so I'm actually learning more about nature-based in this second go around than from the first go around.
Yeah, there's an interest. I mean, this is Patrick. Let me know if we're going into too off.
Keep going,
because the permanence issue is really an interesting one in nature-based solutions, because in theory, a forest can continue living, but all trees are going to die. And what we should be doing is pulling stuff out of the air forever. And what the standards do is, one of the ways they deal with permanence is they just say that if there's a reversal, if a project flips backward, you have to you basically, they have a buffer pool, and if a project reverses, they take the offsets out of the buffer pool. But after 30 years, a lot of these commitments start to end, and so then we've got a whole other problem with keeping forests alive. And the theory behind a lot of the nature-based movement is that 30 years from now, we will have restructured the agricultural economy, and there will be bigger forces at play than just these little carbon payments. But the thing, the question I was going to ask is, it just popped out of my head. Okay, I was going into permanence and nature-based solutions, and oh my God, I just my question.
Okay, so Steve, let me take you back there while you're trying to work out that. While Steve's having a bit of a senior moment this evening, and he's sitting in the middle of the Kenyan countryside. Obviously, the heady summer airs have reached his brain power for the time being. Let me actually ask some very academic stuff, because we didn't really go back there, but you talked about the settlement mechanism, the trust mechanism, and so on. Explain to us exactly how the technology works that you're actually doing that settlement, please, Bill, and also how that works in relation to, I mean, you're Singapore regulated, and therefore it's presumably absolutely the gold standard of regulation, as is everything in the city-state.
Well, interestingly, in Singapore, carbon credits are categorized as intangible commodities, and as such, they don't fall under the purview of the Monetary Authority of Singapore. So we actually spent a lot of time and a lot of money trying to get the MAS to regulate the exchange, but the most we were able to get out of them was a no action letter, basically saying you guys are fine, you're doing what you're doing well, in a sense, and you're not specifically being regulated. The regulator, interestingly, for commodities in Singapore is Enterprise Singapore, and we have obviously our first grant when we set up AirCarbon actually came from Enterprise Singapore. The trust structures very much fall under the purview of MAS. So all client funds sit in US dollar accounts, and those US dollar accounts are managed by an MAS regulated trustee, and that sits bankruptcy remote from the exchange. All of the client carbon credits also sit under a bare trust, which is which again sits bankruptcy remote from the exchange. So we've been very careful in creating an infrastructure that protects buyers and sellers. In terms of how this actually works, probably the best way is just to take you through sort of the process quickly. If you have a carbon credit and you want to sell it on our exchange, the first thing you need to do is go through a very onerous KYC and due diligence process. Once you clear that, you then show us the carbon credit that you want to sell. If it meets the specifications of any one of our contracts and you agree to put it onto the exchange, we then send all of that data to the British Standards Institute, and they do a second check to ensure that that carbon credit fits the specification of the contract. Only then do we allow the credit to be transferred into the trust. And when it's in the trust, then we create a digital receipt on the exchange. Now, this digital receipt sits, we built the entire exchange on the blockchain. And so every trade that happens within a smart contract, which means it's a self-cleared transaction. There's absolutely no need for any clearing brokers because there's no settlement risk. So if you go onto our platform and you press sell, you get filled immediately, and there's absolutely no lag between the buy and the sell because it all happens within a smart contract. So that's the architecture in a nutshell.
Fascinating. That's really, really interesting altogether. And actually, I think that probably ties into something that Peter Second has been saying. We're going to come to Martin Watkins in a minute. First of all, Peter Second, thank you very much. Yes, double gin and tonic. You were reading my mind there over what is now the Global Nature Token, which I suppose is one of those fussier gins and tonics that you get a bit of sprig of mint in, possibly could be a Global Nature Token for you over Friday evening. You asked an interesting question there, Peter. What would the process be of listing carbon credits and tokens on other exchanges or jurisdictions with various levels of adoption of regulatory standard? And actually, I can't help but notice, Bill, you're coming to us today from London, which is definitively not part of Singapore.
No, yeah. Well, we actually have, we just announced that we're launching the exchange platform in Brazil. We have a very significant presence in Abu Dhabi, and we'll be launching there as well. We're following basically a model where the exchanges are all connected. The order books are connected, but the exchanges are very much localized. And each one of those jurisdictions will have a will fall within the regulatory framework of each particular country. With regards to trading carbon credits across platforms, obviously trading carbon credits across platforms within AirCarbon is very easy, but we actually, see trading of carbon across exchanges that may compete with us. So if our price is either higher or lower than one of our competitors, then we will see carbon leaving our exchange and going to our competitors, or vice versa, which is excellent, right? Because that's the hallmark of an efficient market, and that's what we're all after.
Fascinating altogether. So taking that back just a step, you're going to therefore be under a completely different regulatory regime and program when you're in the Abu Dhabi global market, when you're in Brazil, compared to your Singaporean regime, where they're saying intangible commodities are not actually an MAS regulated entity, correct?
Yep. In Abu Dhabi, it's carbon credits are considered a commodity, and so that's actually one of the reasons we're extremely attracted to Abu Dhabi, because we will be able to bring into the exchange a lot of things that are typical of other commodities. So once the regulators sort of anoint it as a commodity and not as a virtual or as an intangible commodity, then it opens up a lot of other things. So we'll be fully regulated, I would think, by the beginning by the end of the first quarter in Abu Dhabi.
Fascinating. Steve.
Yeah, we have a question here that's in my ballpark, which throw here at Bill from Martin Watkins via LinkedIn. He says, how do we ensure the authenticity and consistency of nature-based schemes globally?
Yeah, that's something that there's been a lot of banding about of this idea of a lack of integrity in the carbon markets, and that honestly couldn't be farther from the truth, right? The process for you to register a carbon credit is a completely transparent process. It's a process that takes a lot of time, that has a lot of eyeballs on it. And by the time you've gotten a carbon credit issued by one of the larger registries out there, you've paid your dues and you've earned your stripes. So in terms of how do you ensure authenticity and consistency, I would say just stay within the mean, right? I would say 60% of all the carbon credits that were issued last year came from Vera, which is one of the largest voluntary carbon standards out there. Gold Standard is another one. CAR and the American Carbon Registry as well. So there are a couple of registries out there that are well known, that have discoverable prices, and so that's the litmus test that I would use.
Mm-hmm. Okay, and it looks like we have another question coming here. Hold on one second. This is from Robin Ranson, and he's saying CER versus CAT programs. China announced they were implementing a carbon credit program in 2020. Are they implementing a developing country CER program? Plus, are they keeping internally, or do they trade across your Singapore exchange?
I'm not 100% familiar with the China market, and I've done it on purpose. It's a market where they don't need my help. There's sufficient depth internally, and the learning curve that I would need to sort of jump on to be able to adequately compete in China is doesn't make any sense for me, given that the rest of the world is available and much lower hanging fruit. So my understanding from China is that it's a bit complicated. They have several different jurisdictions that have different markets with different caps, and each one has a more or less industrial focus. They do accept Chinese CERs, which interestingly, by the way, are also accepted within CORSIA, so the CCERs. But other than that, I mean, we've sort of reached the limit of what I could tell you about the Chinese market.
Thank you very much. This is absolutely fascinating. We're here with Bill Pazos, who is the founder and CEO of the AirCarbon Exchange. Also, we've got a special guest presenter in the studio this evening. Well, he's not actually directly in the studio, isn't that the wonder of the virtual world? He's in Kenya, ladies and gentlemen, at this point in time, on the coast on a balmy summer's evening. That's Steve Zwick of the Bionic Planet podcast. We're discussing AirCarbon's net zero mission with Bill Pazos. And so, Bill, tell me, I mean, what do you think is the most exciting thing that's happening in your business at the moment? I mean, you're expanding into Abu Dhabi, Brazil, you're already in Singapore. What's the next phase of growth for you that you haven't already been talking about this evening?
There are a couple of areas that we're working on. One is actually creating an infrastructure that will allow carbon mitigating projects to unlock future value of carbon credits. As I said, we're working with EEX, the European Energy Exchange, as well as Net Zero, which is part of Redshaw Advisors, on a global emission reduction contract, which again will be pretty exciting stuff. And we are now beginning to scratch the surface on how to move into the DeFi space in order to bring to traditional markets the ability to leverage carbon using DeFi.
Excellent altogether. Let me just say at this point in time, ladies and gentlemen, there's something going through on the side chat here. There's a very, very interesting AirCarbon Exchange live stream podcast that you should be watching. More about COP26. Watch the ACE webinar with Lisa DeMarco. And Steve's going to tell us who Lisa DeMarco is and introduce another question from Peter Secon.
Well, Lisa is, I mean, I've known her for a few years, and she's an attorney out of Canada who is, boy, I don't know her whole background, but she's very well respected, and I think she's taking over the chair of AIDA, which is the International Emissions Trading Association. And she's I mean, she's a brilliant woman, really tied into all of these things, and she comes at things from a really strong policy perspective, which she really knows well. Coming up to Peter Secon, his question is, in terms of growth and further global reach, is there any plans to be accessible through other exchanges?
Yeah, so the answer is yes. I mean, in every country that we're looking at, we go in terms of creating partnerships, right? So we've brought our exchange to the point where we have 189 companies representing 29 different countries. And we've also built from the ground up a technology infrastructure for the exchange that's purpose-built for carbon credits. So what we can do is, together with those two pieces, we go into a country and we partner with a strong partner and create basically an exchange that can hit the ground running. And in some cases, it's an exchange. In other cases, it's an auction platform. In other cases, it's simply a marketplace across different corporates. So each one of those processes are going to, from a legal standpoint, are going to be different, but they all have the benefit of having a commingled order book so that you can immediately sort of scale up any market that you reach into. That's been an interesting consequence of the global the Glasgow Pact and the Paris Accords. So because we've sort of created this infrastructure where we're going to be able to trade carbon globally and countries are going to be able to offset their emissions globally, countries have realized that there is value in carbon. And so they either want to tax it or they want to understand their carbon, their contribution in carbon to the world as a whole. And in so doing, a lot of them have announced that they want to have their own internal carbon markets. And so that falls very easily into our strategy of sort of bringing the exchange behind enemy lines, if you will.
Really interesting altogether. So therefore you're working across these things. Let me just understand a bit better. Your EEX partnership, is that still for spot markets, or are you trying to get more into the derivatives business through their auspices as well?
Right. So they're obviously their strength is on the futures side. Our strength is on the spot market, right? The carbon markets, as everybody alludes to, is a relatively complicated market. It's a market that requires you to sort of roll up your sleeves and get into the trenches in order to create a tradable instrument and try and bring scale to the market. That's something that typically large exchanges will sort of move away from. They're much more comfortable in looking at deals that have cash settlement, where they can scale up in terms of contracts very quickly. So just that characteristic of the carbon markets is a bit of a sort of a barrier to entry for some of the larger players. But at the same time, it's a very symbiotic relationship, right? We bring in and bring order to the spot market, and they obviously have the scale to create a futures contract against our spot. So the intent is very much within the GER to be able to launch both a futures and a spot contract. But I'm sworn to secrecy. I can't talk a lot about the GER.
Okay, so we've got the top secret GER, which we're not going to mention whatsoever. Steve.
Yeah, well, let's see. Real briefly, Peter Sakan just says, thank you for the answers all. Quite kind of him. And yeah, I'm very curious to hear about this new contract, because it probably leads into the issue of how we can construct futures contracts, because I grapple with how futures contracts can be created in the structure that the markets have now, with so many different grades of offset stacked into one little, stacked into each silo. I don't know if is there a way you can riff on that a little bit to offer some clue, or is this going beyond I guess because it ties to this issue of creating a global carbon price and whether it's possible. And I'm just I'm really curious. I'm just wondering if you could tell us something about reveal something.
Yeah. Well, I mean, yeah. I think with regards to the market and standardizations and futures, for example, one of the main importances of CORSIA, for example, was that it was the first time that you had a carbon standard that was truly global. So an airline in Japan, an airline in the US, an airline in Brazil, all of them would need to operate under the same standard. And so that standard actually becomes a really interesting way for us to be able to create enough volume behind one contract. And so you've already seen the CME do a futures contract on the CBL markets GEO, which is in essence a CORSIA credit. So the CBL markets GEO and our CET are basically fungible, and we see a lot of activity across our exchanges based on demand for the futures on the CME. So that's all welcome news for us. What's missing in the market is something that, as you were saying earlier, Steve, is that sort of a snapshot of the entire sort of ecosystem, so that you can go long a global emission reduction, right? A global carbon emission. So that's what we're trying to address in designing this, and we do have Redshaw in particular has some patents that surround the concept.
Okay. Yeah, I often wonder if it's even really necessary. I think we all think we need a global reference price, but especially in nature-based solutions, it feels more like a real estate market where you might have some kind of indicators, but never have a real reference price. I mean, is that a viable option in your opinion?
Yeah, I think I think I think the market will like the sort of elegance of what we're working on.
Okay.
I think it's very much doable. I go back to I this really simplistic example of the soybean market, where I say you've got farmers on one end and food companies on the other. When you look at the soybean market, and farmers and food companies maybe are 5% of the total trading that happens in soybeans. In the carbon markets, completely flipped around, right? You've got project developers on one end instead of farmers, and you have corporates that are buying for retirement on the other end instead of food companies. These two represent 95% of the purchase of the trading that happens in the market, and only 5% is actually on the speculative and investment providers, financiers, etc. And the reason for that is that carbon credits currently, and this is what we're trying to change, trade like paintings, and so it's very difficult to scale a market. And what's interesting about carbon credits, and what sort of perpetuates this idea of we really need to buy carbon credits on a project by project basis, what perpetuates that idea is that the buyers of carbon credits at these corporates, they are buying from their marketing budget. And so in the room making those decisions are the marketing people, sustainability people, and maybe one person from the C-suite. So it's not the treasury, right? It's not a cold-hearted decision. It's a touchy-feely decision that doesn't really mean real dollars for the company. So as the price of carbon goes up, as we become more and more carbon constrained, that activity is going to move into the treasury, and you're going to see the professionalization of this market. And believe me, treasury traders have absolutely no time for project by projects. They're going to look at solutions like ours.
Yeah, that is a huge transition. I wish we'd brought that up earlier. We do have one question still out here. Patrick, do we have time to ask this?
Please.
From Ian. Okay, because in the news today, Net Zero Markets to launch global carbon emission reductions contract with EEX and ACX, a year in development. So the question is, are there patents to protect the architecture from competition?
There are, yeah. So we have some patents, and
It kind of alluded to it.
Yeah. Yes, I had alluded to it previously. Yeah.
Okay, so there are patents in existence. Well, let's look to a big macro question in order to end this evening on a high, where we've been talking about AirCarbon's net zero mission with Bill Pazos. Bill, the capital market revolution, that thing returns from 1999, the beast of an original book, back before I think we were terribly concerned about cutting down trees for our reading. What do you see as coming next for the capital market revolution?
There's just a lot of innovation that's across all of the markets. So we're in one part of the market where we're looking for standardization and bringing sort of transparency, ease of trading, price signals. Bringing, as I said initially, traditional markets architecture. If you go down and look into the weeds, it's super interesting what's happening on the technology front. For example, there are a lot of efforts out there to actually remove carbon from the atmosphere. Today, every ton of carbon that you remove from the atmosphere, if you believe those words, in CCS, carbon capture and storage technology, can be as much as $400 a ton. Right? So that's completely not scalable. But I remind you that in solar, for example, today, you're looking at 5 to 8 cents kilowatt hours for solar energy, whereas just maybe a decade ago, you were talking about 20 cents per kilowatt hour. So one of the things that will happen in the market is that we're going to scale very quickly into removals, and the carbon markets is going to move away or de-emphasize avoidance of carbon emissions and emphasize more removals. And that's a trend that you'll see over time. Both are necessary. This idea that you should not really pay attention to avoidance is actually misguided. You need absolutely every single tool in the book in order to address climate change. So that includes carbon taxes, cap and trade schemes, removals, avoidance, anything we can throw at this, we need to do so.
On that note, Bill Pazos, thank you very much for being with us on this 50th episode of the IPO-VID live stream. It's been absolutely intriguing to discuss AirCarbon's net zero mission. We're going to keep the carbon theme going next week. We're going to be with ICE, the Intercontinental Exchange, on the road to a global carbon price. We've got their net zero guru, Gordon Bennett, is going to be joining us. And once again, I'm going to have my special guest presenter, Steve Zwick, joining me. Thank you very much, Steve, for this evening. I know it's getting late with you. 10 p.m. in Kenya this evening. I'm sure your production crew are sitting just off stage with a very hefty G&T, and I certainly don't mean something that can be tokenized, but rather can be drunk, and your pajamas and presumably your slippers and teddy bears, so you can head off to bed soon. Thank you very much, Bill Pazos. It's been absolutely fascinating. One of your great comments amongst many this evening: carbon credits currently trade like oil paintings. We want to scale that process up. And certainly that's going to be a very interesting process in order to manage to get us towards the many aims of what we're looking to achieve over the course of the next few years with carbon finance. Thank you very much to all those people who've made comments: Simon Huckle, Tom O'Brien, Peter Secon, for your several questions this evening. Martin Watkins, as always, a joy to see you, dear boy. Craig Richardson, Robin A. Ranson, and a man who was only going by his Christian name, presumably in order to save some carbon by not typing too much across the interweb, Ian. And thank you very much for your comment, Robert Brown. Once again, great to see you from Clearing and Settlement. Thank you, gentlemen. Well done. I echo that, Robert. That was a great job by Bill and Steve. You may be able to hear this content at some stage as part of the Bionic Planet podcast, which I recommend you listen to. You'll be able to tell if you can't see me, you're probably listening to a podcast. We'll be back next Tuesday. Thank you very much once again, Bill Pazos. This has been IPO-VID live stream. Join us for the debate day in, day out at Exchange Invest, the business of bourses from the water cooler of the exchange industry. My name is Patrick L. Young, Executive Director at Valerium. I'm wishing you a great week in life and markets. Thanks for watching.